Are HELOC interest tax deductible? In this video, I'm going to go and answer that question as well as dispel some myth and rumors about HELOCs not being tax deductible, especially when you're using a HELOC to pay off your mortgage. Hey, what's going on, everyone? This is Kwak here, one of the Kwak brothers, and chances are you've seen some of my other videos about using a HELOC to pay off your mortgage. And very often I get questions about HELOCs not being tax deductible, right? Hey Sam, I heard that HELOC taxes are not deductible when I file my taxes. Therefore, I don't think this strategy makes sense. Why would we use a HELOC to pay off our mortgage if we can't deduct the taxes, right? And I probably get this question almost every single day, so I finally came around to make a video to answer that question for you guys. And by the way, if you want more videos about using a HELOC to paying off your mortgage, as well as investing in real estate and buying rental property, definitely subscribe to our channel if you want more videos just like this. And as always, just a disclaimer, I am not a CPA, I am not an attorney, so therefore please don't take this as a tax advice. This is simply my interpretation of the tax laws when it comes to using a HELOC to paying off your mortgage. So make sure you talk to your CPA so that you get the correct information based on your own unique situation. Now, right out of the gate, when people ask me about HELOCs not being tax deductible, they're often referring to the second lien position HELOC. And unfortunately, people automatically assume that all HELOCs are not tax deductible because they've seen some video on YouTube and they watch Dave Ramsey, or they've seen some other people that talk about this, but it's simply not true. Now, it is true that the interest on a second lien position HELOC is not deductible under taxes when used to paying off your mortgage. Prior to 2018, the tax laws were a little bit different, where you could have been able to go and deduct the interest on a second lien position HELOC, but that has changed after 2018. However, my argument to this is that if you're using the accelerated banking strategy, using a HELOC to paying off your mortgage, you can potentially save several hundreds of thousands of dollars on interest and save several years on paying down your mortgage. Remember, a loan on a 30-year amortization can cost quite a bit when it comes to the interest. For example, let's say you have a $100,000 loan with a 3% interest rate on a 30-year amortization. At the end of the 30-year payoff period, you would have paid approximately $51,000 of interest. So that's effectively 51% effective interest rate. Unfortunately, for some people, the logic is to go and pay that amount for the interest just so that they can save a couple $1,000s on the taxes. And another example, it's kind of like my friend who bought a $45,000 truck just so that he can get a business tax write-off. And he said, Sam, I saved a couple $1,000s on my taxes. Well, first of all, he lives in the city. Second thing, he probably uses the truck maybe once every month, right? So he literally spent $45,000 cash just so that he can save a couple $1,000s, and he's not using the truck, right? It's kind of like the old logic of tripping over a quarter just to pick up a penny. So had he not spent that $45,000, paid a little bit of taxes, he could have used that money to go and buy rental properties or to go invest in stocks or do something else rather than spending $45,000 on a truck that's sitting in a parking garage. Or you can use that money to go and smash the like button on this video for the YouTube algorithm. So bottom line, do you really want to pay that much of an interest just to get a tax write-off? Or save that money, pay a little bit of taxes, and come out ahead with a net positive? So even if the second lien HELOC interest is not tax deductible, the savings you get by using the strategy still outpaces the amount of money you'll save by using the interest as a tax write-off instead of straight up paying the interest. Plus, the amount of time you'll save is going to be astronomical, so you definitely don't want to miss on that. But there is a potential way of making all of your HELOC interest becoming tax deductible. And again, I'm not a CPA, this is not a tax advice. Please go do your own research and consult your own CPA. Now, there's a little less known version of the HELOC known as the first lien HELOC. And of course, if there's a second lien HELOC, there's got to be a first lien HELOC, right? So a first lien HELOC is essentially the only loan on your property. So if you already have a mortgage and you go and get a first lien HELOC, a first lien HELOC will replace your mortgage. So it'll be the only loan, the only mortgage that you'll have on your property. By getting a first lien HELOC, not only do you get the advantage of using a revolving line of credit, but you can also potentially write off the entire interest amount that you would pay on a first lien HELOC. And also, not to mention, first lien HELOC interest rates are very comparable to 30-year fixed rates. So the argument that the HELOC interest rates are higher than a 30-year mortgage is simply not true, and that goes out the window. Many of the students on my program has already completely replaced their mortgage with a first lien HELOC, which gives them the ability to pay down their mortgage faster, and also use that first lien HELOC later on to go and buy buy more rental properties if they want to. Many of them will end up potentially paying off their HELOC within 5 to 10 years, saving them several hundreds of thousands of dollars of interest and getting to deduct the little interest that they would end up paying using the strategy. So if you have not seen my video of using a HELOC to paying off your mortgage or completely replacing your mortgage in the first place, go and definitely check out that video. I'll leave that video down below in the video description. All you have to do is click and go and check out what the strategy is all about. So there you have it, folks. If you've been wondering about the tax deductibility on a HELOC interest, hope this video answers your question. So if you want more information about the strategy as well as getting help from us in paying off your mortgage using a HELOC, go and download our calculator to see how much you can potentially save, not only with time, but also the amount of interest that you'll save using this strategy. And again, I'll leave that link down below in the video description of this video. If you enjoyed this video so far, go and subscribe to our channel if you want more information about paying down your mortgage faster using a HELOC, as well as buying rental property, real estate. Definitely go and subscribe and check out some of the other videos that we have.